Hey everybody and welcome back to another video. This is How to Invest, Spencer here, and this one is going to be on grow generation. We just made this a video on this stock just the other day, and I wanted to make another one because we have a huge move in the stock today, as along with plenty of blood in the streets in the indices. All of them moving down almost at least 0.5%, and the Russell 2000 down almost 1.5%. Grow generation was down up over, I think it was at 12% down at the top or lows today, and bounced back slightly to about 9%, and has declined from almost $28 to a low of 25 even in the day, and has since gained up to almost 26. So if we look at the technical analysis quickly that we set just in the last video, it has clearly broken this channel that I set for it, and has fallen into really a no support range. If we look closer into here, there's really not any good supports for it to fall into. Now it did break very, very cleanly off of the 25 mark today, and didn't retest it. And in fact, if we want to look at the minute charts, we go to the 15. It had a very, very clean break off of 25. We can see here the low was 25 in the day, right around 2 o'clock. And since then, we have had the start of a very, very small uptrend. So we can see here it broke open and then had a slight pullback, but didn't break the lower lows, only went to about 25.33. And then you can see it ended on a high note on the end of the day, continuing into after hours. But I wanted to make this video because a news article just came out kind of looking at the intrinsic value of the stock currently. So if you look here, that's the exact title. It says the intrinsic value of Grow Generation Corp. It says today we'll be doing a simple run of the valuation method to estimate the attractiveness of Grow Generation as an investment opportunity by projecting its future cash flows and then discounting them to today's value. One way to achieve this is employing a discounted cash flow model. Before you think you won't be able to understand it, just read on. It's actually much less complicated than you imagine. Yeah, they're not really lying here. There is very few variables that they take into account, and that's one of kind of my problems with this. And I'll get into my second problem as we get into the table down here. But if we read further, it says the method we use what is known as a two-stage model, which just simply means we have two different periods of growth rates for the company's cash flows. Generally, the first stage is higher growth, and the second stage is lower growth. To start off with, we need to estimate the next 10 years of cash flow, whether it be possible use for analyst estimates, but when these aren't available, we extrapolate to the previous free cash flow from the last estimate or reported value. We assume companies with shrinking cash flow will slow their shrinking rates, and companies with growing free cash flow will see their growth rate slow over this period. So that's another period where I don't necessarily agree with the assumptions that they make. How can you just assume that companies will make less money over 10 years when this is a vastly growing industry, considering that most states in the United States aren't recreational and is what is needed for a lot of home grows, and which is what a lot of the products that they sell on their website, including mass production for big corporations, which is even bigger. So a lot of their growth is in the future, and maybe we could see their highest growth rate not even within the next 10 years, because I believe that this industry is only starting, and once it has become fully recreational nationwide, that mass adoption will be just something that will be considered more closely related to alcohol, and more people will tend to adopt and start trying to grow their own, such as a lot of people like to make their own beers or anything to do with the industry. So it's just, I'm very, very bullish on the industry itself and the company, so I don't like to assume these growth rates for the next 10 years, because even 28% at 2024, I think is very, very lowballing it. They're sandbagging these numbers, in my opinion. If we go down, it says the total value of the sum of the cash flows for the next 10 years plus the discounted terminal value, which results in the total equity value, which in this case is 1.5 billion. In the final step, we divide the equity by the number of the shares outstanding compared to the current share price, 28, and the company appears to be around fair value at the time of writing. So they did all of this work going through all these numbers, trying to estimate what they'll be in the next 10 years. And they said this company is valued pretty fairly at the current period, but will grow pretty quickly over the next 10 years. And really, the one thing I wanted to emphasize from that article is that they're growing much quicker than this article leads on. So if we look at their last income statement from the last quarter, which ended in June of 2021, we can see that they made $330 million for a $1.5 billion company. They currently have a 45 forward PE, which is very high for the rest of the S&P, but this company is not in the S&P. This company is a play on the cannabis industry that doesn't actually sell any cannabis. So it's actually more bullish because they have access to the banking that a lot of the cannabis industry cannot access currently. So they have access to capital, and we'll see that they have an excellent balance sheet, but they're growing at almost 200% quarterly revenue growth year over year, which is really the only thing that matters for this early stage of a growth company. But also, I love that they're already profitable, considering how hard it is to become profitable over time. It's not just something that you can flip a switch. And we can see that they're growing earnings year over year by 160%. If we look at their balance sheet, they have way more than enough cash to sell off all of their debt. Which is just phenomenal for an early stage growth company with this good of a balance sheet. It's almost unheard of. A lot of early stage growth companies, especially in this industry, have horrible balance sheets just because they have to take on a lot of unnecessary debt that isn't through major banks. Two other things that I wanted to look at is that this company is growing much quicker than an S&P company. Now, I said this isn't in the S&P, but there's 500 companies in the S&P, and it's kind of the most well-known stocks in the stock market. So comparing it to those companies, the revenue growth from these companies are growing at 25%, which is a record for the past, it says, 13 years at least. If we look here, this is a graph of kind of the tracking of the past 13 years, and there's kind of no real direction where this chart's going, because we had obviously a very bad negative for the 2020, but these are very, very high and are still dwarfed by the growth numbers in Grow Generation. Grow Generations is almost 10x the S&P average. If we look at earnings is at 10% growth rate for an average S&P company. That's almost 20x an average S&P company. So that's where I think that this or whoever wrote this article is sandbagging the numbers of how much this company is able to grow, just based on the amount of states that they will be able to operate in the future. It's just really sandbagging the numbers, in my opinion. So that would lead me to believe that this company is worth way more in the short term, and that just means that it's a better and better buy as the stock falls further and further. If we do look at the stock chart, we'll go back to the daily to end this. There isn't really much support. So like I said earlier, if we don't see a continued uptrend and bounce off of that 25 number, then I would continue to buy more and more into this dip. So if you are looking to buy this stock, I don't know if I would personally be comfortable going all in on the first day, since it did drop this far and there isn't much support. I would maybe put in a third or a quarter of your position that you'd like to start, and if you continue to see a very strong supported uptrend, then you can continue to add to your position. That way you don't suffer substantial losses right as you start this position. So if you made it this far, thank you very much for watching and have a great day.